What's going on, guys, and welcome back to another video. So in today's video, I have a very serious announcement because I want all investors to be really aware of what's going on right now, because honestly, the stock market could fall very soon. And this is a question I've been getting a lot from people lately is now the right time to be investing into the stock market, or should I be hoarding more cash? Should I invest into bonds, into crypto, into real estate? What should I do with the money that I currently have? Now, here's my advice to you. First, number one thing, never invest money you cannot afford to lose. Number one piece of advice, right? But here's where I'd be very careful. Today, just today, okay, this was after yesterday where we saw the stock market rally. It was like up, 400 or 500 points? Today, the stock market dropped about 400 simply because of rising oil prices. Oil is now $115 per barrel as of recording this video. That's insane because as oil prices rise, here's what's happening. The end consumer can't spend as much money on retail goods, on food, on housing, right? On just utilities in general, because they have to pay for rising oil prices. Everything uses oil. You want something delivered from Amazon? Well, here's the good news. You're gonna pay more because Amazon has to deliver it. You wanna go and order a pizza you want delivered? Guess what? It's gonna cost you more because, well, it has to be delivered. Oh, don't worry, you'll go and pick it up. Well, it still costs more money because guess what? The pepperoni, the cheese, the crust, the box that you get your pizza in, it has to be delivered to that store. So guess what? It costs more money. So as oil prices rise, people have less money. Their buying power is reduced. That's a huge concern. But don't be afraid to invest into the stock market. Don't be afraid to invest in quality companies. That's what I'm currently doing. I absolutely love the deals that I've been getting lately. But here's one piece of advice I have for you. Don't be afraid to take your profits and run. If you just made, a couple $100 today and you decided I wanted to pull it all out and I'm just going to go and I will invest into something later on, that's perfectly fine. I never fault myself or anybody that I know for taking profits early. That's perfectly fine. I'd rather take a little bit of profit, even half profit, but at least that way I'm protecting my investment as opposed to losing all my money, losing all my profit, and taking a loss. So there's a win-win to both situations. Now, here's something else you need to be very careful of. The war between Russia and Ukraine, it impacts us here in the United States. Yes, oil, obviously, I think we all know that. Wheat, other materials, other commodities, yes, it does impact us. But here's something most people don't realize, is Russia is threatening the United States with many different things. Now, we could easily see cyber attacks on the US. That is something that some are already saying we're already seeing, small little glimpses of. We've seen it before. So they expect we are going to see it at some point, but it's going to come in more of a massive wave. And so hopefully that's not the case, but that's what many people are expecting. So if you are Amazon and let's say you get targeted, guess what? Amazon loses money for every second their website is down. Every second a person cannot buy a product that they need, or if it takes them longer to buy a product. Let's say Visa or MasterCard or some other company gets hacked. There's some type of cyber attack on their website. Guess what? They lose money as well. Now, as they lose money, investors start to pull money away from their company. That could actually hurt the stock market. So be aware of that. When you are investing into these companies, be aware of what you're investing into. And is there a threat from Russia on that company? Because in most cases, the answer will be yes. Now, we still know inflation is expected to rise, and the Fed says it's going to peak sometime in Q3. Okay? That's the issues. We still got months to go before we get into Q3. Well, there's a problem there. Is if it peaks in Q3, and then according to the Federal Reserve Chairman Jerome Powell, he says it's going to moderate, it's going to level off before it comes back down in Q1 or potentially Q2 of 2023. Well, we got a long ways to go to get back down to that 4, 5, even 3% inflation rate. So we're a little ways away. So that's obviously a huge concern. Another thing that's very concerning is the housing market. Here's something you need to understand. The housing market, and you're going to see a whole bunch of different numbers. You're going to see people say the housing market could potentially fall 25%. Watch out, right? Shocking news. You're going to see all these, headline stories. And that's not clickbait. It's true that a lot of economists, a lot of housing experts believe that the housing market could potentially fall by 25%. And this is because we are expected to see interest rates rise. Well, as interest rates rise 1%, we expect the housing market to fall 10%. Okay? So we are already expecting prices, especially for a 30-year fixed rate home loan, they're already expected to go up about 2.5%, which means 25% of a decline on housing prices. Here's what you need to understand. What we are seeing though is this 25% loss or potential decline will be offset by about a 14 to 15% gain in the housing market. So how does this work? Well, it's pretty simple. You take the overall gain, right, 15% minus the 25% fall, that takes us to a negative 10%, a 10% decline. So that's what we could potentially see. Even though the housing market could see a 25% decline, really after we offset the gains, it's about a 10% decline. So it's not horrible, but when people are seeing that the value of their home is dropping, guess what they don't do? They don't go and buy more stuff. They don't go and make large purchases. They don't go and buy a second or third or fourth home in most cases. Some people do. But that's the issue, is consumer spending falls right alongside with it. So keep that in mind, because for a stock to really be a runner, especially in 2022, it has to be making profit. It needs to make some money. I would completely stay away from any of those momentum trades. Those are not things that you want to be even touching right now, especially when we got so much uncertainty still in the markets. And another thing, prices on everything keep going up. And as prices keep going up, retail investors are going to pull money out in order to just survive. Now, hedge funds, okay, large companies, these are ones, or investors that have been doing this for some time, they're going to leave their money in because they understand the value of just being invested into the market. Okay, and just the timing of it, staying in for a longer period of time. Now, when this happens and people just start pulling money out, guess what? The money usually doesn't go back in for quite some time. They don't pull money out and hold on to it and wait, okay, yep, 2 more days, and if I see the market really decline, I'm going all in. Some people do. I did something very similar to that about 2 months ago, and it paid off very well. But not everybody does that. Now, here's the next thing, and this is something I really want to caution every single investor on, is over the past couple of years, when I talk to people about what they do, everybody says they are an investor. They're a day trader, right? And the reason I put those in quotes is an investor is not somebody that just invested money and all of a sudden they made 20% and they're good to go. They are an investor. I would say an investor is somebody that has consistent results over years, not weeks or months. Now, in 2021, even in 2022, but especially in 2021, you put your money in anything, didn't matter what it was, in a week or 2 weeks' time, you would have made money. You'd be profitable. The difference in 2022 when it comes to day trading or even swing trading is that's not the case. You put your money in today, in a week, in 2 weeks, in a month, or even 6 months, you could be at a loss. You could seriously be at a loss because things have changed. Times have changed. Okay? We have inflation to deal with. We have a war to deal with. We have interest rates to deal with. We have so many things to deal with at this time. So my warning to all investors is to understand that the stock market could fall very soon. Some say it could fall about 80%. I'm not one of those people. I do not think the stock market where we are at today is going to fall 80%. I honestly don't think it will even fall 50%. If you're invested into the right companies, and an actual company, not a SPAC, okay, not some type of momentum play. Okay, I don't want you doing that. I don't want you risking your money. It's an investment, not a gamble. All right? So just understand the stock market could fall soon, but my expectation is it's not going to fall further than where it was. Okay, so you go back, a week, even a month ago, and you go look at the lows. Okay, you go look at the bottom of whatever company, Tesla, okay, Apple, Microsoft, Facebook, PayPal, right? Redfin, it doesn't matter. Hey, Disney, you go look and see where was it a week ago, a month ago, and figure out where that bottom is. Okay, figure out where we have some support. Figure out where that is, and understand. I don't think it's going to go there. I honestly do not think it's going to go back to those levels. I think that was the bottom, and we're just going to go up from here. Again, I could be 100% wrong, but that is my prediction. Now, one thing I can tell you is I'm not giving I'm not giving financial advice. Okay? This is not saying, oh, it's only going to go up from here. Nope, it could go down. Individual stocks could go down, but just understand from my expectation, what I am seeing, I think it's going to go up. I honestly feel it's going to go up. That's the reason why I've invested back into the stock market, put the majority of my money right back in, because I feel it's a safe investment now. But again, I could be wrong. So do yourself a favor. Go into every single trade with a little bit of caution, but at the same time, do not day trade. That's risky. Go in, put your money in, and hold it for the long term, because that's where it becomes a safer investment. Again, no investment is 100% safe, but that is safer than day trading, of course. So if you guys have any questions, let me know. You can always ask your questions down in the comment section below. If you really have questions regarding your specific investment style or strategy, do not contact me. Do not ask somebody in the comments. Go and talk to a licensed professional, somebody that actually is a financial advisor that can look at your specific situation and give you one-on-one tailored advice. That's my recommendation for you. All right? But again, thank you guys for watching. Have a wonderful rest of your day. Consider subscribing, and I'll see you guys on the next one.